Hello friends, welcome once again. This is Liquidity Narrative, and in today's video we are doing the review of what happened on the areas we mapped out last week. The price delivered into those zones or not. The reason for the review is for learning and not for prediction, just like we said. As of last week, we didn't have any information for our USTEC. Then remember we use the dollar index as our guide to see exactly what we are looking at for on dollar index. This area was mapped out as an order block. We wanted to see price respond to this area for us to take a trade in our Nasdaq at the same time. And we wanted to see price also respond to this level that we mapped out, which happens to be a fair value gap on the weekly. So if we drop on a lower time frame, remember we are looking at this particular week, which we have mapped out. So let's drop on the 15-minute time frame to see how this particular pair, the dollar index, would have been a help for our trade on Nasdaq. So dropping on the 15-minute time frame, as we can see, let's find out that particular level we've mapped out, which is this blue line. So if we zoom out to see apparently what happened on that particular day or week, let's zoom out. Okay, we have it now. Starting from dollar index, as we can see, we are looking at price to get to this zone for us to short Nasdaq, as the market is buying on this order block on the daily time frame in dollar index. We wanted to see the same reaction, giving us a reaction, a clue of what to do to sell Nasdaq. So the market resumed on Sunday, rallied up first into this particular zone. So the next target was our order block, which was this level. Let's find out the time that the market got to this area. The market got to this place on Monday around 4 o'clock. That's the London section. But for Nasdaq, we are focusing on trading the New York section. So again, market ran into it exactly this time, taking out this liquidity, rally into this place around 8:15. So let's see what would have done in Nasdaq using the same time frame between 8:15. A trade would have been on 8:15. The next one would have been on the 10:45. So moving down to Nasdaq to see how dollar index helped us to take trade on that particular day. This is Nasdaq. So we are watching out the same time, the same scenario on Nasdaq to take a short. So this is Nasdaq. As you can see, the market resumed on this day, the Sunday, and rally up, which became kind of a misleading in a way. So our target was to short Nasdaq at the same time that dollar index gave us a clue of dropping to the order block. So this is a market rally in, and we had a market structure shift on the lower time frame, which is a 15-minute time frame, creating all these displacements inefficiency. So the market rally up back into the level we are looking at between the 8:15 to see how it would have taken the trade and the 10:45. So let's watch this. At 7:30, this was the first entry on Nasdaq. Then 8:15, let's see what happened. This is 8:15, market dropped, and then this would have been another entry on that area. So Nasdaq would have taken this trade at this level in Nasdaq. So imagine the kind of, remember Nasdaq is traded in handles and not pips. So let's watch the dropping of Nasdaq to this level if you were in this trade. So apparently when market gave us an entry, it dropped, clear out the first liquidity here, the second liquidity here, and the third liquidity. This would have been all the exits. So when we go to the higher time frame like the daily, let's see what lies in this particular level. Let's map this level and see exactly what lies there, why it should have been our exits in this particular trade. So this is the line. We move over to the daily time frame to see exactly what's there. on the daily time frame. Yes, moving over to the daily time frame was in the line. That's exactly an order block, which market came back to react to as at Tuesday. That would have been our exit first. There was a fair value gap. Market fused it completely and ran into this other block before it continued to rally up. That's just to show you that market does not move randomly. It's always sequent from one liquidity to another liquidity. So that having been said on Nasdaq, that was how we traded Nasdaq using the dollar index as a guide to take the trade and exits at the normal place. So moving over to the next pair, which we also mapped out, which is British pound USD. Let's see how the week worked out on the areas we mapped out on British pound USD. On British pound USD, we are expecting price to rally up to take out this previous week high, which is this will show on the lower time frame, or maybe run into this favor legal, which is also like for hedge, if I'm sure, before dropping to take out liquidity on the downside. That was the expectation. Rally up and take out liquidity on the downside of the market. So let's drop to the lower time frame and see what happens. So if we move down to the 15 minutes time frame, let's see how markets respond and react to our levels that we mapped out. Um, this is the level we mapped out as SATs last week. So the market resumed on Sunday. This is the markets. As at Sunday, market reopened on Sunday and rallied up, took out our previous week high, ran into this gap, which is a fair value gap on the four hedge on and one hedge that we mapped out, and then gave a complete displacement, showing us it's time to enter. So as at between the 9:15 and here, there was an entry opportunity to go short on this particular pair, British pound USD. So the area we mapped out was respected. Price rally took out these lows, which was the low on the Sunday, and took out these lows and these lows. Let's go to the daily time frame to see. Apparently we are expecting price to get to this particular zone. Fortunately or unfortunately, price was not able to get to that level. That just to show you, it's not all about being right, it's about following the price delivering liquidity where the liquidity lies on. So if we move to the daily time frame, which we map out, we wanted to see price getting into this level, which was the previous, which was a low, the previous time low or all time low. Price only took up low as South Wednesday, the low it created on Wednesday before rallying up. It never got to the low that we mapped out. So just to show you, it's not prediction, it's all about following the price action and how price delivered into those levels. So price never got to the area we're expecting it to get to, only took out liquidity here and never got to this area before moving up to the upside. So if we took this trade and held till this area, that means that's the reason we always ask you to take partials in your trading. Never allow all your profit to remain in the trade, even as price move to your direction. As the price drops in each level, liquidity is being taken, gives you an opportunity to take partial. Keep taking something out of the market until market gets to your destination with a little or nothing to lose, even break even. So this is what happened on British pound USD. So we never got to this particular low before price reverses and started to rally to the upside. That's what happened, not random. Price is always delivering into liquidity. So moving over to the last pair that we reviewed and mapped out, which is the Euro USD. Let's see what happened on Euro USD on the zones we mapped out. So this is Euro USD. We move over to the daily time frame or the weekly time frame, which we use for this to see the zones we mapped out on Euro USD. On Euro USD, we are looking at price to rally up, get into this level and to finish and fill this, take out these lows and fill this fair value gap on the weekly. So what the price did as at last week, we drop also to our lower time frame of entry, find out where the market was on that day and what market did on that day. So the Monday of the week as the week resumed, this was Wednesday 26. This was Tuesday, market resume on Sunday the 26th. So we find out this, yeah. So this is Monday, Sunday, yeah, 17 is. All right, this is market resuming on Sunday, and then our expectation was price to drop into the zone. Did market delivered? Market dropped into the zone first on Wednesday and moved up and dropped again. So probably you might take this low. You have if you have taken this trade, take a buy here, and if your stop is tight, apparently price returning back would have been a loss. So then price moved into this area. We got a displacement. Price tapped into the fair value gap and started to rally up on the upside, targeting the areas we've moved out, which was a weekly order block. So everything about Euro USD delivered completely, starting from this level, gave us an entry and delivered to the upside, while British pound completely did not drop into the low that we mapped out. Price dropped into this level, displacement was given, which was an entry, then price came back into the fair value gap and gave us. So if you are in this trade, the advice would have been to continue to take out partial as markets um rally up, took out this level. Your duty is to take out partial from your trade, never hold to the end. As the market rally up into this level, take out your partial, still hold little bit until your destination is being reached, or your target is being reached. That was what happened as at last week on the areas we mapped out, just to show you that price don't move randomly. Price is always delivering from one level to another. And that's the model we follow every single week. Remember, it's not prediction. We followed structure over speculation. Watch out for our Sunday um, liquidity mapping for the week. Thank you and have a lovely day.